Welcome all to the node. I am Mike, aka Veteran Crypto, and with me today is Nick, aka DZ, from Verified Investing. How's it going today, brother?
Man, it's going well, man. It's going well. I feel almost feel like I'm almost too big, man. It got me as a large square over here. I don't know how to feel.
Well, you're the guest. You get the big comfy chair.
All right. Well, I'm sitting on a box crate right now. Just a bunch of milk boxes essentially over here.
Gotcha. So yeah, I mean, big show today. We got a lot going on. So of course, we'll be talking with you and kind of hearing what you have going on and what you're seeing in the markets, DZ. We're going to be doing some deep dives over the weekend. Found an exciting project called Zama. It's basically bringing a privacy layer to transactions on pretty much every blockchain. So exciting new project, kind of a lower cap. And it looks like we're getting some traction on the Clarity Act. So let's go ahead and jump on into it. Nick, I mean, what are you seeing with the Clarity Act and in the progress that's being made in today's news?
We keep getting whipsawed on this Clarity Act, and a lot of it is just what we saw last year. Do you remember how many founders and even senators and policy leaders were saying, oh, December, it's going to pass in December? Before that, though, they're saying, oh, it's going to pass in November. Before that, though, oh, it's going to pass in October. And now we're rolling it back, and now it's like, oh, it's going to pass in the spring. Now it's going to pass by July 4th. Now it's going to pass before the session leaves. Now it's going to pass before the midterms. I've honestly, I gave up trying to listen to the rumors, and I've been going by Polymarket odds, and I haven't checked those in a while. I could probably pull it up over here in a second, but where people are placing their money is probably where, you probably get, right now it's down to 31% on Polymarket. So, right now it doesn't seem likely if you want my honest opinion.
Yeah, and I'm seeing. I mean, that's kind of what the topic of today is. We're seeing a Hyperliquid is going head to head with Kalshi and Polymarket for the prediction markets. They're coming out with HIP4. What they're calling outcome markets framework on mainnet. Announced an upcoming upgrade enabling permissionless prediction market deployment. So.
I mean, what are your thoughts on Hyperliquid as the protocol, or maybe even the price and et cetera?
Well, David, how about you tell him? Because I mean,
phenomenal. Yeah. So Nick, what we think about projects in general is they need to satisfy our trifecta, right? So that means they need real user growth, real user adoption, and those users, they need to drive real revenues for the protocol, and then those revenues need to accrue to token holders in some way. And so our trifecta gets satisfied by Hyperliquid really well. And, when I take a look at Hyperliquid and I use the protocol, I use it just about every day. I'm a pretty active trader. And look, it works extremely well. And I'm thinking that the token itself, I think it could really run, man. Because when I compare it in terms of market cap to something like BNB, and I see BNB at like a $70 billion market cap or so, and then I see Hyperliquid sitting at what, 15, 16 billion or so, I think that Hype could run up to 70.
Can we share my screen real quick? I have a Hype chart pulled up. Tracking it a lot here. Let's see. I think that's what you guys have. There you go. There you go. All right. Yeah. So this is the Hyperliquid chart. These are just daily candles. And I noticed this parallel structure. I noticed this, honestly, as soon as we hit this, I was just like, well, wait a minute. And then it happened to actually coincide with these daily candles right here. Let me go ahead and just draw that in. And you can just see prices, rejecting, finding support, rejecting. And look, you can also see all this activity right at the midway point. You can see it at the midway point here, and you can see it at the midway point right there. And what do you even know? It's hitting the midway point again. So I actually finally took my first profit on Hyperliquid at the top of this parallel structure. Told myself, you know what? I'm thinking I'm going to, rebuy in at this midway point. I did not pull the trigger because it happened over the weekend. I normally don't like to buy tokens, or at least altcoins on the weekend. So I might end up having a smaller bag, but you can't be mad when you're taking profits. Right now, I would keep an eye out on this resistance. You can just see, the daily candles just beating against this thing. 1, 2, 3, 4, 5, 6. So about 5, 6, 7 candles. It's been rejecting off this range. And right now, if I were to hit this, say today, which Hyperliquid can do, it's going to be right at $66. And just on that, look right here, that one daily candle, all the way from the top of the range to the midway point of the range right here, 2 daily candles all the way from the middle to the bottom right here, basically 2 daily candles all the way to the top. So, don't sleep on this one. This could be knocking at $66 today if the bulls can maintain control. But that's just what I'm seeing on the Hyperliquid chart.
Now, DZ, I'm curious, what type of moving averages do you like to throw down on a chart like that?
You know, I normally wouldn't even use moving average on something like Hyperliquid. One is just a little new, and when it does come to moving averages, you know, I like to look at the 200-day. I like to look at the 50-day as well. This one has been more structurally driven, and I can go to the weekly here, kind of show you what I'm talking about. At first, this one just loved even numbers, and so this pumped. Where did it pump to? $30. You can see that right there is at 29. It fell. Where did it fall? $10. And so this one was always moving basically within multiples of 10, sometimes 20. Right there, it wicked up. Where does it wick up to? $59.61. So right at $60. And it fell. Where did it fall? Right at $20. It's $20.60. And then when it found a top, it didn't quite push up to 80. I think too many traders were waiting for an $80 hype. And then that's why basically the longs had to get wrecked there. So I just been looking at this more of a price structure rather than the moving average, just because it is a little young. And I think this one's going to keep trending up. So, if it comes down to, say, the 200, yeah, this is probably going to be a great buy. I don't even know if I have that pulled up, but I don't know if it will. It might be a long time before you get to see that.
Now, what if you take just a regular trend line tool and anchor it to that first high and then extend it to the next higher high and then extend to the right? So if you take it from that,
look at that. I mean, perfect. I mean, that is just nice. That's when technical analysis, man. It's like, all right, you draw this from here. No one knows if it's going to hit right there, but what do you know? That's exactly where it goes. And so, yeah, I think that's also a really good target. I think in my guess, it would leave this parallel structure, then bounce, just come back to the scene of the crime, as they say. So it'd be something like this. And then that's
what Gareth says. Dude, I love Gareth's analysis, man. He's provided so much value on YouTube to so many people. Happy to see that you're on his team now, man. That's really great news.
We lost your camera, DZ.
Oh, okay.
Oh, he's coming back.
Maybe not.
Yeah, man. So what do you think, Mike? Taking a look at Hyperliquid, I think, honestly, that if it's able to break out above those recent all-time highs, I think that this thing could really run, man. I think it could put in some multiples.
I know that. I mean, I didn't buy a huge bag, but at about $55, I bought like $500 worth, just because I wanted exposure to it. I missed out on hype for quite some time, and and so when we got that little bit of a pullback, kind of that first pullback there, with all those red candles, I decided to at least get some. I wanted some exposure to it, so I jumped in there, got a little bit and been sitting on it. And, a lot of it is because the analysis that, that we've been, pointing out, where it's outperforming Bitcoin and the overall markets. And it just keeps on doing that. So, and then we're seeing these moves where, that HIP4, where they're, launching that new functionality. They have the volume, they have the adoption, they're generating the fees, all of those things in our trifecta. They're, hitting it on all the marks, and now they're adding prediction markets as well. So, I mean, if they can keep up this momentum, I'm personally seeing big things for hype. And, I wish that I would have gotten in earlier, but, wish in one hand and shit in the other, see which one fills up first. You know what I mean?
Yeah, so what I like to do here, and Mike, you were just talking about this, is price these assets in Bitcoin terms, because not only do they have to satisfy our trifecta, but they also need to be outperforming BTC. And so if we just take a look at hype in Bitcoin terms, I mean, look, this is what outperformance looks like. Trading well above that 200-day moving average, big breakout here. I've got that level of resistance drawn in. And I'm just thinking to myself that this thing could run a little ways. It gets difficult to project out where it's going to see resistance if it starts to really make some moves to the upside during this next bull. So I just threw in some extensions. And I'm just thinking to myself that, man, that flywheel that Hyperliquid has going for it, all of those revenues that the protocol generates, I really do think that this thing could run, man. All it needs to do is enter price discovery around, up above $77 or $80 up here. If it's able to do that, then I think it could run and put in some really nice multiples.
I would tend to agree. And, and there's a lot of ways that you can use the hype token in DeFi and stuff too. So, It's something that I do have some dry powder on the side that I've earmarked for it. I'm hoping for some lower levels, but with hype, it's like you almost just kind of, for me anyway. I mean, you do you, but you almost have to buy these pullbacks because it doesn't really dump in any significant way.
Now, how many tokens are unlocked each month? How many hype tokens are unlocked each month? I know there's still a team unlock. I'm pretty sure that there's a team unlock. But
Well,
I think
I know that new tokens are minted because they're that's like the kind of the whole point is that the fees need to outpace the mint. Just like with Canton is my understanding. I mean, I could be totally wrong on that, but that's my understanding from the deep dive that we did. And that's the flywheel that we talk about, that if the fees ever ceased to outpace the buyback and burn ceased to outpace the mint, then it would become inflationary and potentially could have serious downside effects for the price.
so. It looks like on the 6th of each month there are some core contributor unlocks. So it looks like 24% or so of the 1 billion hype token total supply, or roughly 238 million hype tokens, those are allocated to core contributors. And so on the 6th of each month, it looks like there are hundreds of thousands of hype tokens unlocked. So look, I mean, that's just something to be aware of, right?
No, absolutely. I mean, it's that's what we try to focus on here is the tokenomics of these projects. Because without fully understanding what you're investing in, you're chasing speculation. You're chasing hype. Whatever has the mind share in social media, which there's value there. We've all learned in crypto that whatever the hot narrative is, if it's AI, if it's perps dexes, if it's DeFi, if it's RWAs, whatever it is, you can get pumps. We saw the ISO 20022 family of tokens that there's really none of them that I'm bullish on personally, but credit where credit is due. Last bull market, right after Bitcoin, there that family of tokens was one of the few that pumped. So as much as I am not an XRP person or an XLM or an HBAR person, just based off of the the trifecta that we use, it's not to say that you can't make money on these. It's just it's not. I'm looking more for a long-term mindset where I can invest in these assets and potentially use them in DeFi to earn yield, to varying degrees, and really I'm looking for that Google, that Microsoft, that Amazon. I'm not looking for a quick in and out. I'm not a day trader. That's just not me. But if you have that skill set, then yeah, I mean, you can definitely trade buy the rumor, sell the news, and all that kind of stuff.
100%, man. And when I'm taking a look at markets here today, it's it's 12:15 Eastern Standard Time, so market's been open for a couple of hours. The thing that I'm looking at today is crude and yields on the 10-year. So, Mike, remember last week I had drawn in this level of resistance, this gap fill up here for crude oil? Well, crude has filled that gap. And so this is a big swing back to the upside for crude. Now, what does that mean for yields? I think it likely means that we're going to see rates push higher. So this is the yield on the 10-year US Treasury note. And this has found support at this 200-period moving average on the 1 hour. But the important thing here, we've got to zoom out on this one. And so when we zoom out, what you're going to see is that it's basically sitting at a long-term level of resistance and just barely starting to break out here. So I've got a level of horizontal resistance and trend line resistance drawn in, but it looks like rates could actually start to run a little bit. And so what does that mean for bonds, notes, and bills? Well, it means bonds, notes, and bills, could potentially push a little bit lower. So if we're going to see rates push higher, what does that mean for inflation expectations, right? It likely means that the market is going to start to price in higher inflation expectations, I think, as a result of crude oil. starting to push a little bit higher here. So that 200-day moving average for crude, which comes in right now at around $75, let's call it, that 200-day moving average, yes, crude did break down below the 200-day, but was able to regain it. And now that it's filled that gap right there, right around, what is that, like $85 or so? Mm-hmm. Now that that gap has been filled, maybe we see crude back off a little bit here and, maybe pull back down to that 200-day moving average right there. So I'm just thinking to myself that you got to watch rates, but you've also got to watch the momentum names. So those momentum names, think, the semis, right? You got to watch those semis, man. Micron, big move to the upside today, plus 5.66%, trading $896. SanDisk, big move, plus 7%, trading $1,450. Let's take a look at the Kospi, though. So this is basically levered semis, because I've seen some crazy stats out of South Korea, man, that it's like 1 in 3 traders I think it's 1 in 3 adults actually in South Korea has a margin account at a big broker, and they're trading this stuff on leverage, man. So yeah, big correction out of the Kospi. And so momentum names have really started to unwind. So this is a 31% correction from peak to trough out of the Kospi. And so we see a similar type of pattern playing out, not just in the Kospi, but also in all of these other, all of these other chip names. Take a look at Western Digital, similar type of pattern. And if we measure from peak to trough, that's a 46% correction. But I think that that's probably healthy here, simply because these moves to the upside out of all of these chip names have been just massive, and so quick. They've basically put in these parabolas, all of them. Mm-hmm. And the thing that's been concerning to me, Mike, is that, the guys who I follow who have been in markets for decades, right? And Gareth Soloway is one of them. These guys that I follow.
Ben and Gareth are the two that I pay attention to.
Me too. Yeah.
And of course you know.
No, but I mean, look, man, I watch Benjamin Cowan all the time. I watch Gareth Soloway every single day. And now that, Nick has been, so kind as to give us some of his time today, I'm going to start watching Nick too, man, DZ. So that'll be great. But I'm just thinking that, hey, whenever
and Nick, feel free to come up on stage. I mean, we can still hear your voice. We just can't see your mug.
Yeah, man. So the thing that I'm thinking about here, though, is, look, cycles in markets tend to repeat, right? So whenever I see, these the gentlemen who have decades of experience watching and trading markets, whenever they say, hey, when you see a parabola out of the chip stocks and you see at the top of the parabola a bunch of big IPOs, that tends to mark a little bit of a top for a while. And then I also see another metric, the S&P PE up above 23. Forward-looking returns over the next decade tend to be 0. So
I'm loving that tokenized S&P.
Oh yeah, on which protocol?
I honestly, it doesn't matter. I mean, I just like that there's a tokenized S&P 500 because, I mean, I know one of my brothers, he's done really well in the S&P. And having it tokenized now, as a long-term investor, as far as for retirement, things like that, being able to lever that and borrow against it and things like that, access that liquidity to where you're not incurring that. Talk to a tax professional, but being able to access that liquidity without incurring a taxable event, the way that the laws currently are, is is a powerful thing. So, that's, kind of what a lot of the wealthy do. My brother Taylor, when he comes on the show, that's kind of what he specializes in is, estate planning and things like that with his law firm. And, that's something he always talks about is, leveraging debt to access liquidity to not have to, it's actually ends up helping you with taxes instead of hurting you. So that's what the wealthy do. The wealthy leverage, their assets. They don't, they keep exposure to them but they're able to access that liquidity to to lever up. So that's something that I'm really trying to focus on right now is building out my portfolio for a long-term investment strategy in a way that I can access it. If I see an opportunity that I can borrow against those assets and use that to grow my portfolio. Nick, what is some of the stuff that you're doing?
Now, I do like the tokenized, S&P 500, whether you want to, you do the Qs, you do the spiders, the SPY, etc. But then it enables you to make some good moves on the weekend. I think what we saw this weekend, if you were to open up a trade, right when something major happened over there and, in the Middle East, I think there's a lot of opportunity in that as well. And for metal, I think it's really good for the precious metals. I think a lot of people were discounting or not really taking into effect what kind of, I don't know, haircut they would take, So they have these silver coins. They have it in their, they got it from their grandfathers just sitting in a dresser. And then say they did try to sell the top. Say they tried to sell silver when it was at 120, 122. If you took it to the pawn shop, they weren't giving you $122. But if you're doing this on chain, you're doing this while it's tokenized, then you can have a clean exit. And you don't have some gruff pawn shop guy saying, "Oh, I'll give you $94."
Hey, that was me. I ran a rare coin and precious metals shop for a while, and you're right though. It's called a premium. So on the buy and the sell, they charge a premium because
they have a brick and mortar store. They have to pay for that infrastructure, and also supply and demand. It's on a local level as well as a global. So I totally understand it.
If I'm buying your silver at 120 and we saw the pullback. I bought a bunch of silver at 120. Now I'm buying it at, now it's selling at 60. So, there's some risk involved as well. So, but you're right. That's why I'm so bullish on these tokenized assets is it makes illiquid things because I have a bunch of gold and silver. I have a bunch of rare coins sitting in my safe. But, if I want to sell those, I got to load them up in my truck. I got to drive to town. I got to find the grumpy pawn shop owner that, DZ was talking about. And I got to wheel and deal with them. Whereas the tokenized ones, I can sit down with my tea or my coffee in front of my keyboard, bing, bang, boom, I'm out.
Now, what do you think of this silver pullback? We're down to in the 50s all the way up from the 120s range. Do you see a lot of buy pressure at 50 or do you think, people are going to panic and start selling if it hits 49 and, maybe even cascades further?
Silver historically has been severely undervalued. JP Morgan has got their PP smacked a bunch of times by the U.S. government for suppressing the markets. And reason being is it's used so heavily, for industrial purposes, medical purposes, things like that. And so if it skyrockets, that affects, a lot of things. There's a lot of, secondary and tertiary effects of that. So I personally think that it's inevitable. Silver is going to go up.
On a long enough time scale, but in the meantime, it could easily go into the 40s. There is that gap. Yeah. You see the two beats against the horizontal side. Was that right around December of 2025? Mm-hmm. I want to say there's a gap on the daily, right before the third push through. Yeah, right there.
Look at that perfect cup and handle.
Mm-hmm. That handle's on steroids.
Yeah, man. When I take a look at this pattern here, I'm just thinking to myself, okay, I want to zoom out in time and I want to take a look at what silver has done over, maybe several decades, right? Because every time we've seen silver put in a parabola, it's come back down to earth. So,
it's significant drawdowns as well.
Oh yeah. Oh yeah. So, yeah, a ton of volatility, man. So, what has been driving this recent pump out of silver, right? Well, is it the hyperscalers, buying up all of these chips, the massive demand from hyperscalers to build out those data centers? Is that part of the reason why we're seeing silver run to the upside? Is it the federal government deficit spending to the tune of $2 trillion a year? Is that reducing the value of the denominator, the US dollar, to the point where, hey, precious metals have no choice but to rally? Is that the reason why we're seeing
I think there's a
rounds?
third reason that's actually maybe more important. It's the de-dollarization. Once we froze a lot of Russian bank accounts, I think China really took that to heart. And if you saw what they did with their gold reserves, they started loading up massively after this is what 22 with the Ukraine situation. We froze billionaires' bank accounts.
Yeah.
And if you're a Chinese billionaire with a lot of exposure to the US dollar, you do not want to hold that anymore, nor do those Russian oligarchs nor any, let's just say, global wealth. And I think a lot of it is, if you're getting out of the dollar, you might not want to buy one of the other foreign exchange currencies out there. You might end up, looking at silver and gold as something very attractive.
Well, they're all the fiat currencies are inflating, and you got India that's buying massive amounts of silver. You got China and Russia buying massive amounts of gold. Like you said, DZ, they're deleveraging, from the dollar and fiat currencies because, over time, precious metals go up in value, whereas fiat currencies and, that pretty much we're seeing they're all inflating.
All right, let's do a spicy take. Is there gold in Fort Knox? Scott Bessent said, well, I haven't seen it myself, but some of my staff went. This is just recently. So some of my staff went, and I assure you there's gold there. Do we believe them?
Hey, don't worry about it. Look over there. A Wookiee.
Yeah. Hey, it's a Wookiee. It's Chewbacca. He's from Endor.
Yeah.
No, I personally think that it's a fugazi. It's the way that they print money, the fact that they, we went off the gold standard, back in the day. The way that our government spends money, I think that they've probably, raped and pillaged, every nook and cranny. I mean, look at what they did with Social Security. Look what they've done with, all the fraud that is, rampant. The Defense Department, they've failed 7 audits now. All that stuff that was going on with the daycares and the Leering centers and stuff like that.
Well, and also Doge. Doge was our last hope. It was the last great chance that we were going to have to, fix a lot of this fraud. Next thing you know, Tesla dealerships are being firebombed, and they rolled back a lot of the search finding for a lot of the waste and abuse.
Mm-hmm.
Oh, it's a real shame, man, to see that. Just a horrible thing to see those fire bombings. I'm happy that they stopped doing that. But what do you guys think about Bitcoin here? If there is a true de-dollarization, why are we not seeing flows into BTC? I mean, over the last couple of weeks, we definitely have, in the month of July. And so, DZ, I'm curious to get your take on this. What do you think of the Bitcoin cycle? What are your thoughts on the cycle?
Well, the cycle's still strong, and it's not invalidated just yet. And it does seem like, it's not 0% chance odds that we're going to find a bottom in October, which fits with that 4-year cycle. And it's, if you look at the 4-year cycle, if you look at the actual halving, it's closer to 3 years and 10 months. And so it's not a surprise that it was December of 2017, November 2021, October 2024, or 5 rather. And so if we just continue down that path, we're going down in the months. And so a lot of people are waiting just for December for some reason. I could see a bottom in October. I mean, I would say there's a non-zero chance this was the bottom, but I do think the odds are still favoring the 4-year cycle still holding true.
Me too. And so sometimes I like to just, play around and, throw down a level of trend line resistance. I like to anchor this trend line to the 2017 highs and extend to the right. And look at that. Beautiful. It marks the highs. And so Gareth Soloway was, I think, the only guy on YouTube that I saw calling the top for BTC in October of 2025. Well, I mean, it was Gareth, and then
he got beat up for it too. He got beat up on socials for it too. But he was right.
He was right, man.
Yeah, because it ended up being, you can see it's a triple touch. And so, he was looking at the trend line and, oh no, it went higher, $2,000, get the pitchforks. Let's go after Gareth. But, then it pushed down. It was like, yeah, he looked right. Then it pushed up again and he looked, then it didn't look so right. Ivan on Tech also did a decent job. He was risk off October 9th, the day before 10/10, the big liquidation event. So
yeah,
I mean, he also, kind of got lucky there. Maybe it was luck, maybe it was skill, maybe it was a combination of the both.
I think sometimes you make your own luck because you're so skillful. So, but I mean, yeah. So seeing BTC break down below the 200-week moving average down here. And then look, the guy who I follow most closely when it comes to the Bitcoin cycle is Benjamin Cowan. And what he's been saying is that, I like to call it the prophecy, but the Bitcoin cycle, for whatever reason, it looks like Bitcoin does actually have a cycle. What Ben Cowan has been saying is that in the midterm year, in the Bitcoin bear market year, in the month of July, Bitcoin tends to rally. And
Yeah,
so that's
I
what
saw
we've
that
seen.
as well. The only problem I have with that is, Ben Cowan's a smart guy. Don't get me wrong. We have 2 data points.
True.
And
Yeah.
so, sure, maybe it's going to happen. And, sometimes he'll massage the numbers. I think he did it in February. Oh, February is going to do this. And then it kind of did it like March 1st. And he's like, well, it's close enough to February. And so, he kind of gives himself a little bit of wiggle room there. But I agree. Yeah, sure. Things look, pretty bullish for July. But, he's like, well, it happened in 18 and 22. So, here we go again. And, until he's wrong, you can't really knock it, but it's not the cleanest data point, if I had to be fair.
I agree. I really do. I mean, look, 3 data points does not a trend make, right? Like,
And really, it's 2. We're trying to do the 3rd one now.
I know. Yeah. You're absolutely right. And that was something that I always like to point out. But for whatever reason, the cycle has
right,
held.
God dang it.
It's held. So what else is going on in news?
Well, you have all the people pushing pump.fun. And my issue with that is, I don't know if you guys have seen the token unlock screenshot that's going around. That just, to me, seems like clear market manipulation behavior. However, those market makers national level. And so I would hesitate to short pump. I personally wouldn't. I do have a chart. I don't know. I might probably have to reshare it. Let me leave full screen here.
Oh, that's David. There you
go. Yep. Share screen. Let me grab my window. Pump.fun. Here we go. So we are, hitting pretty strong resistance. I think you guys. Yeah. So right here, you see, we pushed down. We had a nice break above. And what do you know? The daily close and the daily open right there along the same horizontal line. There's too many zeros, but it's basically 2 cents even. Very, very close, like 0.0009. So basically at 2 cents, it's a strong psychological level. And just for reference, this is the graphic that I was mentioning earlier. The colored bands that you're seeing, this like large rectangle, this is how many of those pump tokens are circulating. And you'll see right here, there's about to be more tokens circulating. Yeah. And then there's going to be what they would call a drip. Every month, I don't know how it's programmed, but there's just going to be more and more tokens being released. This is a lot of sell pressure at the end of the day. However, if you have, say, $100 million worth of this token that's going to be unlocked, you don't mind paying a market maker $1 million to pump your token. And so this token might pump. I would hesitate trying to short it. It does look like it's starting to lose a little bit of ground here, lose a little bit of steam. But I do have a level above this. If you look right here, you can just see nice little trend line that's kind of ascending. And what do you know? We hit against it right here. It's kind of established right here. Rejected, found another rejection. So if we do pump, I would be looking at this range for a short, but be careful because it can wick above and, so have very, very low leverage if you're trying to trade it. And look at that. The candle just went green as we spoke.
Well, and if you're curious about the tokenomics of pump.fun, this is our official website, the node.pro. You can go to the Intel library. This is where we have all of our deep dives. You can just type in pump. And we have a deep dive here, and it will tell you all about what DZ was just talking about, all the tokenomics, the unlocks, all of that. So you can watch the video, read through all the the content. It has all the different aspects of tokenomics. The cumulative lifetime fees. Just all the data points that you're wanting to look at. If you're wanting to invest and and not speculate. Got the slide deck, got the infographic, and then the most important thing is our source document that actually cites our sources. So we have hyperlinks to all of the places that we got our information from. So, and most of them are primary sources. So if you've ever been to college, ever in high school and advanced classes, you understand the importance of citing your sources. So this
Mike, where's your citations?
Exactly, Professor DZ. That's just something I wanted to share because it's so important that you understand what you're investing in. After you understand the risk, what you do, that's your business. It's none of our business. But we here, all of this is free. We give all this away. We don't charge for this. The Intel library, DeFi University, all of this. We genuinely just want to educate you to help onboard you into crypto. Because we all, and I'm sure DZ has plenty of stories, I know David does and I do, where we made mistakes, sending it to the wrong address and, basically burning a bunch of your liquidity, things like that. We've all done it. So we wanted to build this out to help you all to not make those mistakes, and onboard you, because the more of us that are in crypto and in DeFi, the more fees that are generated. I mean, this isn't totally selfless. We want to responsibly onboard people so that you're using these platforms, you're using these protocols, and you're generating fees, because if you're providing liquidity, that's how you're earning yield, is from the fees generated on the protocols. But let's jump into some more news. So, what is the big news today? So it looks like the U.S. legislative push stalls on ethics talks. So, Democrats, and I actually agree with them on this, are pushing for an ethics, clause in this legislation, because let's be honest, Trump has done some shit when it comes to crypto with, the meme coin and World Liberty Fi and, all these different things. I'm not a big fan of those things. I think as the president, that there's a conflict of interest. And I just think it's a bad look. I mean, Nick, what do you think?
I mean, Melania coin is just kind of it's just a sign. Yeah, obviously this is terrible, man. It's something you would see in a dystopian future movie where like teenagers are fighting amongst themselves to the death or something. It's not something you would expect in America in 2025, 2026. And so, yeah, you're going to definitely have the Democrats push for this ethics clause. However, you're going to definitely have the Republicans and Trump primarily refuse to sign it if it is in there. He is not going to sign any legislation that's going to lead to his arrest or his family's arrest. And I think that's going to end up stalling out a lot of, any legislation that has that attached to it. Basically, it's just kind of almost a poison pill.
Man, yeah. Well, I mean, look, how much money did he make the weekend that Trump coin launched? It was like $500 million. Dude,
it sucks all the liquidity out of the market.
Yeah, I remember. So he launched it on a Friday, and it was right before his inauguration. He had launched it on a Friday, and that Saturday morning, I was on Orca. I had a really large position as an LP, as a CLP over on Orca. And for about 6 hours, I was a CLP in Trump Sol, did extremely well. The reason why I did so well was the token essentially moved sideways, but the volumes in those pools on Orca, on Solana, were massive. And so when you provide concentrated liquidity, you have to make sure that there is a ton of volume in any pool that you're providing liquidity in. Because when you provide concentrated liquidity, you're essentially kind of sort of short a put, kind of sort of. It's basically a derivative. And you can use delta, gamma, theta, and vega to price that derivative. So when I'm providing concentrated liquidity, I'm always thinking to myself, what is my impermanent loss risk? Because that's your gamma. Your gamma is your cost of volatility. So if I've got a ton of risk that I'm taking on, all this gamma risk, I've got to get compensated for taking that risk. And the way that you get compensated as a CLP is earning fees. Those swap fees in the pool that use your liquidity, you earn a portion of those fees. So if I'm going to earn fees, that's my theta. So my theta must be greater than my gamma. My gamma, again, that's my impermanent loss. If my theta is not greater than my gamma, then I would be better off just holding the tokens and not providing them as liquidity in the first place. So what I'm looking for when I take a look at pools is there's got to be a ton of volume. That is the number one prerequisite, because if there is not sufficient volume, then there's no way that you'll be able to beat that gamma, that there's no way that you'll be able to beat that IL. So you just really got to be careful when you're providing concentrated liquidity. I think a lot of people think that it's some way to earn passive income. It is not. It is simply not.
I fell into that trap. And I said, that's why we give that stuff away to teach you guys, because for a long time, I was thinking, I'm making a bunch of money in fees, and I wasn't understanding fully, impermanent loss and divergence loss.
Can I just say that was one of the best explanations of gamma and theta that I probably have ever heard, and that was actually really good job there, David. I actually got to jump off, man. I got to figure out this camera issue before I start my next stream. But that was really good. I'm definitely going to go check out the Node.pro. It's is there a link down below?
Yes, there's links. And before you go, let's actually show. So if you want to follow DZ, if you're not already, Nick. This is his profile on X. It is just at Nick Valdez. So I highly suggest that you follow him. Great content, and we'll definitely be watching you. And hope you can come on again, brother.
Yeah, man, definitely. And hopefully I get this camera thing situated. I think I know what it was. I think I was sharing my StreamYard with the company StreamYard, and then there was a stream that Drew did. Drew Dosick, and I think that's what kicked me out. So I'm gonna figure all this stuff out, and next time you'll see my bald, shiny head.
You know what? I'm right there with you, brother.
All right, sounds good. You'll have a good one.
Thanks for your time, man.
All right, no problem. Bye.
Take care. I'm glad he was able to make it.
That was fun.
Yeah. No, he's a smart dude. It's I always love to give him shit, in the chat over at Discover Crypto, because he's a big Cardano bull, and so it's in my nature. I like to poke fun at people. It's all in good spirits, but just like you do with me with Arrow, and it's just if you don't, if you can't be too serious. If you're too serious, emotions creep in, and as we teach in DeFi University, is you cannot allow emotions to creep into your investing, and it's a good check. If somebody says something negative about something you're invested in, and you feel yourself wanting to lash out, take a breath and really examine that, because if you're not open to new information, especially information that is contrary to your thesis on your project, then that means you're not looking at the whole picture. If you're not willing to unemotionally listen and process something that is bearish about your project and objectively look at it, and fact check, do your research, things like that, you're not going to do well in investing. You're basically it's a purely speculative play, and you're hoping that there's enough hype in the project that unless you just get lucky. But I've seen too many people wrecked.
Yeah, emotions are bad. Emotions are bad when it comes to investing. You don't want to have an emotional attachment to an investment. What you want to do instead is do as much research as you possibly can, gather as many pieces of information as you possibly can, and make an informed decision. That's what you want to do. And then when you are proven wrong, you need to be able to cut that position. Your first loss is going to be your best loss. So, I always think
XRP.
Yeah, well, XRP, look, Ripple, the company, Ripple Labs, I think that they make a couple $2 billion a year. Now, it's a private corporation, so we're not going to be able to find out exactly how much revenue they generate. But the problem for me with Ripple Labs is it looks like they make around $200 million a year for the software business. Hey, that's great, right? But I think they make about 10x that amount just by dumping XRP tokens on retail. So I don't think that's a good look.
And some of their services that have nothing to do with the XRPL or XRP. Ripple Prime. They're the key custodians for the DTCC. And that has nothing to do with the XRPL or XRP. So it's just I hate to sound like I'm constantly dumping on XRP. I just see huge red flags. I mean, it's a massive market cap, so the risk far exceeds any potential reward, because I guarantee you, I won't guarantee 99% chance that it's not going to some massive valuation. It's just not. If you sit down, go through our deep dive, sit down and really examine, has Ripple really pursued making XRP a core piece of their infrastructure? Have they have they made any adjustments to the value capture? Have they taken away utility or added utility? And the answer is they've taken it away. By adding RLUSD, that was the major catalyst that made me re-examine, my over 40,000 XRP that I held. It was my largest bag. I saw them launching RLUSD, and I saw utility being taken away. I saw Ripple making strides to more towards becoming a bank and selling XRP tokens to buy Medico and all these other things that we thought in the XRP community were bullish for the token. But we look at it now, all of those acquisitions haven't done anything for the adoption of XRP. They've done great things for the company Ripple, but they haven't done anything for XRP. So anyway,
it doesn't look like most of that volume that they run. They do run cross-border remittances, but doesn't that all happen off-chain? Like, it doesn't happen on the XRPL, the vast majority of it anyway. So if there was any value there, it's not going to accrue to that XRP token. So that's a problem for anyone who's holding XRP.
Well, and Lucas, this is valid. Can you call it dumping when they relock more than 50 or 60%? Absolutely, because it's 1 billion tokens per month that are unlocked. And so, if they're dumping half of those, that's constant sell pressure. So, it's dumping, and they're using that to grow their business. But are they growing it? Does them growing it benefit you, the XRP token holder? So I just don't see it. And the adoption of XRP being rampant worldwide. I don't see. There's people that are buying it, and there's the ETFs and things like that. But I just don't see the adoption. Nobody is adopting the XRPL for the most part. And the only TVL that's on the XRPL is in RWAs, much of which is stagnant liquidity. It's not even using XRP for gas most of the time because none of that liquidity is moving.
And then you got to ask yourself, XRP is sitting at a $70 billion market cap today. I'm taking a look at coin market cap, just looking at it on my other screen. $70 billion market cap. Where do you think it's going to run to? Do you really think that the XRP coin is going to run, it's going to double up, and you're going to see, the market cap of that coin up at $140 billion? That's basically the bet that you're making. If you're holding XRP, you think that it's going to put in a couple of multiples. And I just don't see how that's possible without a legitimate value accrual model. And I don't think that the XRP token has a legitimate value accrual model right now. Now, that's not to say that they won't figure something out, in the future, but I like to invest based on what's going on right now today and not try to speculate on, maybe, kinda, it could in the future potentially do something. I want to figure out what's going on right now today and make some decisions based on that. So I just don't see how XRP can run and double up from here. If we take a look at just the chart, let me just bring up XRP USDT over on Binance. This pattern, I want to be fair. So if we zoom out here and we take a look, let me grab all the data. So XRP.
Really, while you do that, one arm bandit, this is okay. It's only a small part of your portfolio. Okay. I was just going to say that, this is a very dangerous game. I'd rather hold it and not need it than not have it and have it run. That's really, really dangerous. But you do you, and if it's only a small part of your portfolio, you're kind of using it as a lottery ticket. Okay. And then this one, Ripple is acquiring many different products, a brokerage, treasury company. I could go on. They have hundreds of partnerships that once broader speculation rolls in, they will capture demand. That's another dangerous play because, like we were just talking about, Ripple acquiring Medico and all these other companies. What's the connection to XRP and the XRPL? Most of the liquidity, again, is in RWAs on the XRPL, but for the most part, XRP is a gas token. So its value right now is pure speculation. And, and there's I mean, that's true of the majority of crypto. It's not just XRP. There's more than 95% of this market that the token, lacks value capture. So it's not just XRP. I don't want to, you to think that we're just beating up on XRP. I mean, XLM, HBAR. I mean, go down the list. There's maybe at the most 5%, and that's stretching it, of this market that where the token actually has value capture.
I think it's less than 1%. I think the vast majority of these protocols, coins, tokens have no value capture model at all. Or, for a coin like Pump, a token like Pump, that value capture model is broken. So, the Pump.Fun protocol, and we ran deep dive research on that a couple of weeks ago. It's in the Intel library over at the node.pro. But, the value capture model for the Pump token is completely broken. And it's a shame because the Pump.Fun protocol generates like $7 million a week on Solana.
Fast.
I mean, massive. They drive a ton of revenues. But you got to ask yourself, do those revenues accrue to you, the token holder? And if they don't, then whenever you see a pump, like what we've seen recently with Pump.Fun's token, maybe that's just a speculative move. Maybe you use that move to the upside to take some profits if you got them. So,
but with some of the unlocks and that that trickle of of new tokens that are going to be coming on the market with Pump, I mean, that's constant sell pressure. So there's going to have to be an increase in fees. I mean, just simple simple, math is that it's going to need to generate, and we're getting closer and closer to potentially moving into the beginnings of of a bull market, but it's going to need a lot of volume to generate fees to swallow up that sell pressure.
So when I take a look at bringing it back on over here to XRP, so I see what Lucas Hawkins says in the chat here. So he says that you'd have to think that XRP is going lower than $1 to say to never hold it. And even without utility, it'll pump on a bull run. And I highly doubt it'll ever go below 50 cents again. So I think that going below 50 cents is unlikely this bear market, simply because we've got this level of long-term trend line support, which comes in for XRP right around 53 cents. So I think it's probably pretty unlikely that it actually breaks down below this level of trend line support. However, I do think that this could get tested this summer. And, look, if we bring it back on over here to Bitcoin and we take a look at BTC in July of the bear market year tends to rally, and that's exactly what we're getting. But those rallies at the end of the month of July, they also tend to fail. So if this rally out of Bitcoin fails at the end of this month or into the end of this summer, well, what does that mean? It means that the cycle is just repeating again. So if this cycle repeats, we should see a Bitcoin bear market trough put in by the beginning of the fall. And I think that the level could be around 49K. Now, if you take a look at, oh man, the lightning and the thunder, I don't know if you can hear it, but, oh man. So, yeah, but I do think that 49K could be the bear market trough. Now, here's another thing to keep in mind. There are some really big resting orders sitting below the current market for BTC. So as it gets down to 60, all the way down to 49, if it gets down there, there are really big whale orders down there. So that could be a significant level of support down there at 49 for BTC. You've also got that level right there. I think that was the first yen carry trade unwind back in August of 2024. There was a flash move to the downside out of BTC where it found support where you had some highs after those Bitcoin ETF products launched in January 2024. So that initial pump in January 2024, that put in a level of resistance. When that level of resistance was broken to the upside, it flipped and became support. And notice in August of 2024, that level held as support. And so my thought process here, Mike, is that this cycle repeats, and it is no different than previous cycles. And that means by the beginning of the fall, we get an opportunity to buy BTC down here around 50K. What does that mean for altcoins, though? most altcoins are positively correlated with Bitcoin still. So think XRP. If XRP is still positively correlated with Bitcoin, and if Bitcoin puts in one more push to the downside, well, I think it would be pretty likely that XRP puts in another push to the downside too. And because XRP is a little bit more volatile than Bitcoin is, I would expect that XRP would put in a bigger percentage move than Bitcoin. So I'm thinking
most altcoins would.
Most altcoins, yeah. So I'm just thinking to myself that, if there's another move lower out of XRP, that it would find support in the mid 50 cent region, somewhere down here, 55 cents or so. But again, it doesn't meet our trifecta. There's no value accrual there. And, I don't see the users or the user growth on the XRP ledger. And I also don't see the XRP ledger generating revenues. And I don't see those revenues accruing to XRP token holders. So I'm kind of stuck at a loss understanding why you would want to hold that token unless it's purely to speculate on Ripple Labs, the business, but you've got no connection there's no connection between that XRP token and the revenues generated by.
There was a whole court case, SEC versus Ripple, where Judge Torres ruled that it's not a security. That Ripple has no legal obligation to you, the token holder. That's the long and the short of it.
You got to keep that in mind.
So let's before we get into. So if you're interested, if you want to see data that kind of supports what we're talking about, go to XRP Scan. This is the data from the XRP ledger. You can see. I mean, this is the number of payments from one account to another. Over time. Since August of 2025. You can change the dates if you want, but this is shrinking. This is contracting. This isn't growing. You can look at payment volumes. Again, it's contracting. The amount of users. You saw a spike. Back here in October of 2025. But since then, it's been trailing off down and to the right. Same thing with number of active accounts. XRP burned his fees. That's trending downwards as well.
That does not look good.
I mean, this isn't my opinion. This is the kind of stuff that we look at here. We look at data. Again, if you want to trade hype, if you want to trade buy the rumor, sell the news, there is value there. And yes, you can make money. Yes, will XRP, pump on the next bull run with everything else, or if the rest of the market does, probably. But do you want to be invested in a $70 billion market cap token that might pump, or would you rather be in something that has better fundamentals, more adoption, more fees and revenue being generated, better tokenomics to where it has that value capture that we talk about, that you can, use to earn yield and, and things like that. Those are the things that we look at here. So anyway, let's take a look at, so over the weekend, the first deep dive, if you want to share your screen, David, we'll bring up the deep dives. So over the weekend, I ran into Zama and started looking into it, and it looked interesting. I haven't gone totally through the deep dive, but I'm liking what I'm seeing. And basically what it is it's adding privacy to basically, all the major chains when it comes to transactions. So it's, a privacy layer for you to use with your wallet, so that people can't see, the trades that you're making, and, the movement of liquidity and things like that. So kind of an interesting project.
Yeah, let's check it out. I don't know anything about this one.
Public blockchains operate on a structural paradox. The same absolute transparency that ensures decentralization simultaneously prevents institutional adoption. On a public ledger, every transaction is a matter of public record. For major financial institutions, this transparency is a liability. Clear text ledgers expose proprietary trading strategies, transaction balances, and the identities of counterparties to every competitor on the network. The Zama protocol resolves this conflict. It functions as a modular confidentiality layer using fully homomorphic encryption, or FHE, for private computations on public infrastructure. It's a decentralized computation and key management layer that sits on top of existing chains like Ethereum and Solana. To understand its value, we must analyze Zama's 2026 rollout, its specific crypto economic model, and the systemic supply risks hidden by its own encryption. Without cryptographic privacy, institutional capital cannot move on-chain at scale. FHE is the technical requirement that allows public blockchains to meet the privacy standards of global finance. The foundation of this system is a new technical standard, ERC 7984. This acts as a privacy-preserving equivalent to the standard ERC20 token. It replaces clear text balances with encrypted handles, represented as 32-byte references. Encryption happens client-side via the Zama SDK before reaching the blockchain, ensuring information remains confidential inside a smart contract. These transactions are processed by an FHE virtual machine and a decentralized network of off-chain coprocessors. These coprocessors perform the necessary math, like checking if a balance is sufficient, directly on the encrypted data. They update the state of the ledger without ever needing to decrypt the underlying values. Ultimately, ERC 7984 enables a system that is publicly verifiable and auditable, yet completely secret at the data level. We can see this in practice with the Statehouse Confidential USDC Vault on Morpho, which launched in mid-2026 to provide a path for institutional yield. First, standard USDC is wrapped into CUSDC via the Zama app. The transfer into the wrapper is visible, but the resulting balance is immediately encrypted. Upon depositing into the Stakehouse Vault on Ethereum, the deposit size and depositor identity remain entirely hidden. These deposits are pooled and routed into Morpho's lending markets. Because the capital is aggregated, Morpho only sees the total flow, preventing the leakage of individual institutional positions to the public. The yield generated from these lending markets is then distributed back to the depositors in the same encrypted form. This vault structure provides a template for institutions to access DeFi markets without revealing their financial footprint to competitors. However, privacy-preserving pools face a significant operational risk: regulatory blacklists. On May 30th, 2026, a federal court order highlighted this vulnerability. When a court ordered Circle to blacklist a wallet tied to a dispute, the resulting freeze hit the entire CUSDC wrapper contract. Because the balances were encrypted, the issuer could not isolate the target. As a result, $12.5 million of unaffected user deposits were locked up alongside the disputed funds. The freeze was eventually reversed, but the incident proved that standard encrypted pools were too risky for institutional use without a way to handle targeted compliance. Zama's solution to this is a feature called transitive compliance. This update allows a compliance action on the underlying asset to propagate through the wrapper. The system mathematically traces and isolates only that specific balance, preventing a single flagged address from freezing the entire pool. For institutional allocators, this is a necessary safeguard. It ensures that the protocol can meet legal requirements without compromising the assets of innocent participants. To evaluate the Zama token itself, we have to look at how it captures value from this network activity.
There we go.
The protocol does not charge for the FHE computation itself, nor does it share a portion of fees directly with token holders. Instead, it uses a burn and mint model. The net change in supply is balanced between staking emissions and fee destruction. On the mint side, a 5% annual issuance is split between FHE coprocessors and key management nodes. On the burn side of the scale, fees for ZK proof verification, ciphertext decryption, and bridging are collected in Zama and permanently destroyed. Fees are priced in US dollars to keep costs stable for developers, but they must be settled in Zama via an on-chain oracle. The token only becomes deflationary if transaction fee volume exceeds the 5% annual inflation. Thus, its value is a direct proxy for network utilization.
Okay, so how many different protocols have we seen use a similar model?
The
Where
burn mint model, it seems to be the freaking, the what's the word I'm looking for? The status quo, or it kind of seems like it's what everyone's going with. And some older projects are changing their tokenomics to that.
Well, I mean, the big problem there, though, is that and maybe it's not a problem, but this is something that you've got to watch. These models require a ton of transaction volume to then burn those coins. And if there is not sufficient transaction volume, then you might not ever see many of these coins flip deflationary.
Yeah.
So as long as they remain inflationary, look, you've just got to know that. It doesn't mean that you can't make money, but you've got to go in eyes open, I think.
Well,
However,
that's why
the token
that's why you got to focus so heavily on the trifecta. You got to be looking at solid adoption. That's why I'm so bullish on Kenton, is because it's not a DeFi protocol that if something better comes along, a better platform comes along or something like that incentivizes people more, that everybody's not going to move to that platform, and then because that can happen to hype. They're making all the right moves, and it's looking very very positive, but you have to understand that if that volume moves, that could flip inflationary. Whereas something like Kenton, you can focus on adoption. And so if you have like JP Morgan Chase and all these big institutions that are starting super validators and and running those and putting and utilizing the network and paying fees and things like that, to me that is more bullish long term, because banks and institutions don't move fast. They're big, slow, cumbersome beasts because they have lawyers, and they like the bigger the organization, the slower their decision making and the slower the moves they make. So they have regulatory compliance, they have lawyers, they have bean counters, they have investors that they're responsible to. They have boards that have to vote on things. There's a lot of moving parts that all these boxes have to be checked before they can change anything. So if you're seeing them sign up with some of these crypto projects and actually launching, not signing MOUs, not letters, no letters of intent or anything like that, like actual real adoption, to me that is very solid.
Now, you see what Lucas is saying in the chat? How does burn mint accrue value? Also, how does a coin flipping deflationary affect value accrual? Well, if you've got a fixed supply token and that token is being minted, there's still some inflation there, but there's a mechanism by which those tokens can be removed from supply. We also refer to that as those tokens being burned. Well, then if there's a fixed supply and there are still tokens being unlocked, being minted, but there are more tokens being burned than are minted, then the float can actually contract.
Well, you mean if there isn't a fixed supply and more coins are being minted, right?
Well, so you can have a fixed supply coin, but not all of the float is trading yet.
Oh,
so
gotcha.
You could see those unlocks happen. So basically, as long as the token supply at the margin is shrinking, then that could mean number go up for the US dollar price of that coin. So that's basically like part of the value accrual model that we're always looking for.
market valuation faces significant structural risks. With a fully diluted valuation of $380 million, only about 20 to 25% of the supply is currently in circulation. On-chain data shows extreme supply centralization. The top 10 addresses control over 97% of the total Zama supply.
Ooh, man, I don't know about that. That's not good. Whenever we see something like that, that type of centralization risk, that's always a red flag.
Yeah.
One address alone holds 68% of all tokens.
Oof.
Because market depth on secondary exchanges is limited, any liquidation of this single wallet would likely cause a severe price collapse. To prevent this concentration from leading to validator centralization, Zama uses a concave weighting function for its staking rewards. By scaling an operator's weight by the square root of their staked balance, the protocol creates diminishing returns for the largest pools. This encourages delegators to spread their tokens among smaller, independent operators. This mechanism protects the security of the network, but it does nothing to protect the token's price from the actions of its most concentrated holders. The most immediate economic headwind arrives in February 2027. This marks the end of the one-year cliff for early investors and the core team. At that point,
unlock.
50% of the total supply will begin to unlock, introducing a historic amount of potential sell-side pressure.
That's not good.
Zama is attempting to manage this through confidential vesting, a feature made possible by their acquisition of TokenOps. This system encrypts the vesting schedules on-chain. The release curves, the unlock sizes, and the recipient identities are encrypted, making them invisible to the public. This design prioritizes institutional stability over public auditability. While confidential vesting prevents market participants from front-running VC liquidations, it creates an information asymmetry for retail participants who are unable to track token sales in real time.
Why is that a good thing? I don't think that's a good thing at all. So
No.
what they're saying is that they've got a technology here that makes that unlock schedule opaque, where you can't see it. They called it a confidential unlock schedule. Is that what
Well,
it
I mean,
is?
that's kind of their whole model is that, basically it's a confidentiality layer for, other chains and tokens and, things like that. So that, it's the privacy movement. Anything in finance, I think that it's going to have privacy. Especially for institutions and things like that. And that, that's why I'm bullish on Kent, is because it appears that all the banks and institutions are signing up with them because of that that privacy aspect, to where they can have their siloed network that still has interoperability with other siloed networks and multi-chain and all of those different things. So I mean I definitely, I bought a little bit, and I'm up on my investment. I'm up like 12% on my Zama investment. I bought some on Saturday, and there was a nice little pump today. But if you want to take a look at the chart real quick.
Yeah, let's do that. So here's
The
the
chart looks
chart.
beautiful.
So here it is on a daily. And so this is actually pretty good. So you got that breakout above that what was a level of resistance. And so if I just go ahead and grab a horizontal line tool and throw this down there like so, so you've got that level of resistance. You got a breakout during the session today. A price has fallen back down below that level of what was resistance. It flipped, became support, but you got a false breakout brewing right here so far. So, now we've got to think about, okay, well, where's the level of support down below? Let's go ahead and use these lows from February of this year, grab that as an anchor and extend to the right. So now we've got a level of resistance above. And in fact, I'm going to go ahead and move this to the highs of the day today. So you've got a level of resistance above at 4.1 cents, but then you've got that support down below, which comes in at, let's call it 3 cents or so. So within this range, you're basically putting in this triangle type pattern, which, this chart doesn't look bad to me at all. Now that I know that 96% of the supply is held by like a handful of wallets, and nearly 70% of the supply is held by one wallet, and that unlock schedule is confidential, I don't like that.
I might be taking my profits and just putting that back in dry powder.
Yeah, and then so another thing that we like to do here is make sure that we price these digital assets in Bitcoin terms. Hey, this looks good, Mike. This looks good. Zama in Bitcoin terms, this is what you're looking for. You're looking for up and to the right. So this tells me that Zama, the Zama coin, the Zama token, has actually been outperforming Bitcoin since March of this year. That's amazing, man. That's pretty amazing to me. So this is what we're looking for. And not only has it been outperforming Bitcoin, but it also put in a fresh all-time high today in Bitcoin terms. So not bad, not bad. Let's bring it on back here to the research.
For those participating in the network, the focus should be on yield optimization. Using the concave weighting model to delegate to smaller operators is the most efficient way to capture rewards. For developers, the priority is risk management. Implementing transitive compliance is essential to ensuring that individual regulatory issues do not disrupt broader encrypted pools. Zama has built the cryptographic tools required for institutional DeFi to exist. Its ultimate success now depends on whether its transaction volume can generate enough fee burns to overcome its concentrated and inflationary supply.
Man, that was a great point. And that piece of deep dive research, it basically does need significantly more transaction volume to overcome that inflationary supply. And if you don't have a window into the unlock schedule because it's confidential, then you have no idea when these VCs are going to start dumping these coins.
Well, yeah, it's going to be super hard to, and that's why they love it. That's why these institutions, the big money loves the privacy because, if you can't see what they're doing, it gives them the advantage. So, I mean, I hate to say it, but I mean, it's the same thing with Canton. I'm bullish on Canton because it's getting the adoption, and the tokenomics are such, and the burn mint mechanism is such that adoption, directly, the fees and revenue generated directly, well, potentially directly affect the price of the token. That we've kind of seen that with other projects that use this burn mint ratio. So it's no matter what, there's going to be some speculation, in these markets, because if there isn't a direct revenue share, if there isn't like dividends or something like that paid out to token holders, because they can't do that, that would make it a security. So that's why all these projects are adopting this burn mint mechanism, is because it is a legal way to give potentially token holders exposure to the fees and revenue generated to attract that liquidity. So, I mean, that's kind of my long and short 2 cents on it. Yes,
So, Mike,
Shine.
have you had an opportunity to take a look at the Zama website?
Yeah, I have. But real quick, Shine, welcome to the channel. First time I've seen your name. But yes, Canton had one of the fairest token launches I have ever seen in crypto. And we've actually interviewed Shal Kafur, one of the co-founders of Digital Asset and Canton, here on the show a couple of times now. And he's a great guy. We're very bullish on Canton, but we have to look at the whole picture. So anyway, what were you saying about the website?
Oh yeah, no. So I mean, I haven't had a chance to take a look at Zama yet, and so just taking a look here at the website, something that I always like to do is scroll down to the very bottom and I look for the documents section.
Mhm.
So let's see here, company, community, documentation. There we go. Let's take a look at this. So welcome to Zama's documentation, quick start, Solidity guides, Zama SDK, protocol apps, code examples, Zama protocol light paper. Perfect. Okay, so let's take a look at the SDK. TypeScript SDK for confidential smart contracts, shield, transfer, and unshield tokens with full homomorphic encryption. Okay, awesome. So this is interesting. Now, it did say in the deep dive research that there is a shielded pool on Morpho. Did I get that
There's a
right?
vault. Yeah, there's a vault.
A shielded vault on Morpho. So let's take a look. How can we find that? It's a Steakhouse Financial vault, I think, right?
Yep.
Did
Yep.
it say what chain it was on? I don't think it did.
I would guess base.
I kind of would guess base too. So I'm back over here. Yeah, that would be my guess though. So I'm back over here at the, at the Zama.
Every time I hear homomorphic, that's exactly what I think. I'm like, no homo.
So I'm over here at zama.org and confidential token, shield, unshield, and send. Confidential DeFi. Let's click on earn. So when I click on earn here, okay, there's the vault. So it looks like 23 million in deposits in this vault, earning 8.28% APY. That's not bad. That's not bad at all. Now, what's the collateral though? So it looks like the collateral is 98% Coinbase wrapped Bitcoin. Okay, so that tells me that this is likely a base chain vault on Morpho, simply because of that Coinbase wrapped Bitcoin there. So powered by Morpho, all right. So how can I deposit into this vault to earn that yield? It looks like I would have to deposit CUSDC or USDC. Okay, so I would have to confirm and connect my wallet. I'm not actually going to do that here, but this looks pretty interesting. Now, I wonder, okay, no performance fee, so that's good. Steakhouse Financial is the curator. This is, I'm assuming, on the base chain. And hey,
Well, since
8
it's using Coinbase to wrap Bitcoin and stuff like that, that would be a good guess.
Yeah, that's why I think that this is a base chain vault. It could be on mainnet though. It could be on ETH mainnet.
It could
So
be.
yeah, I wonder how they're generating this yield here. So 8.28% APY. Okay. So how do I get that yield boost? Boosted rewards from Zama's incentive program. So I want to make sure that I'm understanding this correctly. The net APY is 8.28%. It says the vault APY is 2.70%, and the yield boost is 5.58%. So that yield boost, how is that paid? Let's take a look at this. So here we go. Earn rewards by supplying to the Stakehouse Confidential Prime USDC version 2 vault on Morpho. Okay. 12-week yield boost program. Alrighty. And that ends September 15th of this year. So it looks like it's a daily drip, that distribution. So what is the drip? Is it Zama tokens? Is that what's going on here to boost your APY? That you're actually getting some Zama tokens delivered to you? Looks like the pool is about $230,000. I'm assuming that this is the pool of incentives that are distributed to, a vault, people who have deposited into this vault. So it looks like all depositors earn boost rewards. Let me zoom in here. All depositors earn boost rewards proportional to their position size and duration. Rewards are added to the vault at each daily batch and share across all LPs currently participating. Larger positions and earlier entries capture more of the daily drip. No lockups, no minimum deposit, no eligibility restrictions. Okay. Whenever I see an incentivization program like this, though, I'm kind of, a little bit suspicious of it, simply because I would prefer to earn yield that is not incentivized. So when I see a net APY at 8.28%, and I can zoom in here a little ways, when I see this net APY at 8.28%, but the native vault APY is actually just 2.70%, the vast majority of your yield is whatever that yield boost is. So,
Well, and we keep kind of bringing this up as a ruler, for stuff like this is, you can invest in U.S. Treasuries and earn more than the 2.7%, with a lot less
right,
risk. So
right.
it's kind of like, you got to be realistic at some point where sometimes, traditional vehicles, traditional investment vehicles are better than some of the tokenized ones. So,
Well, certainly a different risk profile, that's for sure. Look, if you're going to take on all of this smart contract risk and all of this protocol risk and counterparty risk,
yeah.
you got to get compensated for taking that risk. And, I don't know that you really are here. 2.70%, you could just buy like 90-day treasuries, you could just buy like bills, something like that, and earn more than this 2.70%. And so if it's true that that yield boost is actually just some type of inflationary mechanism as a result of those Zama tokens being unlocked or being minted, I don't think it's worth it. I don't think that the risk is worth it here. And, holding that Zama token, look, it's great to see the Zama token outperforming Bitcoin. That's one of the rulers that I always use is the token or coin outperforming BTC? And that's exactly what we see here for Zama. It is outperforming BTC. Now, if I grab a trendline tool and throw down support right here, something like that. So yeah, hey, it's outperforming BTC. That's great to see. But this thing looks like it is still pretty inflationary, though. That's a risk to be aware of.
Well,
So
we
yeah,
haven't seen that massive unlock that's coming. I mean, there's a lot of potential sell pressure that's on the horizon. So
Yeah, you just got to go in eyes open. It doesn't
Yeah.
necessarily mean that this is bad or that you won't make
No.
money. It just means, hey, you got to know what you're investing in.
Exactly.
Okay, so the next deep dive today is Jitto Finance. So isn't this the largest restaking protocol on Solana? I
I believe so.
think it is. Okay, let's play the research.
Inside the high-throughput architecture of the 2026 Solana network, thousands of transactions are sequenced and settled every fraction of a second. The primary traffic controller for this execution is Jitto Finance. It serves as the coordination layer for block construction and the capture of maximum extractable value. The scale of this dominance is defined by the metrics. Jitto holds over 14.5 million natively staked SOL, nearly $3 billion in total value locked, and its validator client infrastructure commands over 97. Following a one-year cliff, tokens from early investors began a linear release, injecting $3.3 million weekly. This creates a structural supply overhang. Without a mechanical system to drive demand or absorb this float, the JTO token faces a persistent disconnect between the protocol's high utility and the token's market price. To build a mechanism capable of absorbing that pressure, Jitto first had to upgrade its technical architecture to match the 2026 Solana Alpenglow deployment. Alpenglow compressed network finality times to 150 milliseconds. This 150 millisecond window requires near instantaneous block building. Legacy off-chain engines cannot process sequences fast enough to prevent slot lagging and transaction failures. Jitto's solution is the Block Assembly Marketplace, or BAM, a sequencing network designed for this high-speed environment. BAM utilizes trusted execution environments to execute proposer-builder separation natively on-chain. This moves the sequencing logic into secure enclaves, removing the latency of off-chain communication. To maintain its 97% stake weight, Jitto had to ensure its validator set transitioned to this BAM infrastructure immediately. By controlling the infrastructure capable of operating within a 150 millisecond finality window, the protocol effectively secures the primary channel for Solana's MEV revenue. The logistical challenge was convincing thousands of independent node operators to adopt this hardware standard quickly. Under GIP 31 and 37, the DAO redirected its protocol revenues into an incentive pool, distributing Jitto Sol rewards to validators who successfully deployed the BAM client. However, if rewards were distributed purely by size, the largest validator entities would monopolize the pool, centralizing the network's block construction. To prevent this, the DAO implemented a piecewise linear effective stake curve. This formula dictates how much of a validator's actual stake counts toward their subsidy payout. Payouts scale linearly for smaller and mid-sized operators until they reach a threshold of 1.5 million SOL. Beyond that point, a 0.5 discount factor is applied. For every additional SOL delegated to a large validator, they only earn half the subsidy weight. This curve continues until it hits an effective stake cap of 3.0 million SOL. At this point, the subsidy flatlines. Even if a validator brings 10 million SOL to the network, their earnings are mathematically capped. This geometric function incentivizes participation across a broad coalition of operators, while preventing whales from centralizing the rewards or the infrastructure. This secured the network, but the protocol still had to address the $3.3 million weekly JTO unlock. Historically, protocol revenues simply sat in the DAO treasury, providing no direct economic link to the JTO token holders. JIP 38 changed this, transforming Jitto into a token-centric network, where JTO serves as a value capture asset with a programmatic claim on fees. The primary engine for this is JTX Trade, Jitto's consumer exchange. While the DAO already captures millions in quarterly tips, JIP 38 focuses on the trading fees, where 80% of the revenue is allocated to the DAO. 100% of that DAO share is routed into a smart contract called the Rev Splitter. The Rev Splitter executes an atomic instruction. It uses the revenue to buy JTO on the open market and burns it. This mechanism is programmatically locked. It cannot be diverted by the DAO until the Q4 2027 reappraisal. By turning trading fees into a programmatic burn, Jitto creates a consistent, non-discretionary buyer of the JTO token.
That's good. We're always looking for that. That value capture model looks pretty solid so far.
This provides a structural counterweight to the weekly dilution from venture capital unlocks. Maintaining this economic engine requires high-velocity parameter tuning that standard DAO voting is too slow to handle. Under JIP 35, the DAO delegates configuration authority, including the power to alter BAM settings and rev splitter routing, to a 7-member dev council. To prevent this council from being captured or attempting to hijack the protocol's revenue streams, the DAO implemented a final security layer. JIP 36 established the constitutional veto trigger. An automated scanner monitors the transaction queue. If it detects an unauthorized or malicious change to the core protocol configuration, it triggers a red alert. Any token holder with at least 250,000 JTO can then activate the veto trigger. This executes an audited clawback script that bypasses all time locks. It instantly revokes the dev council's permissions and rotates all authority back to the main DAO governance address. This balances the need for operational speed with a mathematically enforced kill switch, ensuring that the dev council remains aligned with token holder interests. By 2026, Jito Finance has transitioned from a back-end tool into a self-regulating economic machine. The BAM subsidies align the validators to the hardware requirements of a 150 millisecond network. The rev splitter ensures that the value generated by that infrastructure is programmatically converted into token scarcity. And the veto trigger ensures the human elements of the DAO cannot bypass the protocol's core logic. These three systems create an interlocking engine where protocol utility and token value are no longer separate. Jito Finance survived its supply overhang not through passive market dynamics, but by engineering the mechanical links that define how a protocol justifies its valuation.
Yeah. Okay. So what did it say? $3 million a week in unlocks?
It's like 3.3 million. It's honestly, I mean, it seems like a pretty complicated tokenomics. I mean, a lot like that whole veto switch, and it's just I don't know. Me personally, I'd probably pass on this.
Yeah, I'm taking a look at the protocol over here on DeFi Llama, and a lot of annualized fees. Okay, that's great. $246 million in fees annualized. That's amazing. Let's go ahead and scroll down. Let's take a look at the income statement. Looks like this protocol also makes money. Hey, yeah, that's a good thing. So,
yeah, absolutely.
Protocol makes money, generates a lot of fees. Those are good things. Let's see how useful this coin is in practice, though. So to figure that out, what we're going to do is we're going to hop on over here on DeFi Llama to chains. And then from chains, we're going to scroll down. We're looking for Solana. We're going to click on Solana. And then, okay, 4.9 billion in DeFi TVL. Let's go ahead and scroll down a little ways here. Alrighty. So Jito is the 6th largest protocol on Solana by DeFi TVL. So one of the largest protocols on Solana. That's a good thing. Now, what we've got to figure out here is what can we do with the Jito Sol LST? What can we do with that coin in DeFi? Well, to figure that out, I want to take a look at a couple of money markets, Camino and Jupiter. So I've got Camino brought up here. And what we're going to do here is we're going to click on multiply. And from multiply, I'm looking for that Jito staked Sol. That's what I'm looking for. So I want to see if there are any loops that I can use that Jito staked Sol token in. Are there any loops that contain that token? So what is that token? I'm going to bring it on back here to DeFi Llama, and I'm going to type in Jito, and I'm looking for the token, Jito staked Sol. So what is that? There it is, Jito Sol. Okay, so now that I know the token, I'm going to hop on back over here to Camino, and in the search, I'm just going to type in JITO. There it is. So if you supply Jito Sol in the Sol BTC market and borrow Sol against it, it looks like your max leverage APY is less than 0. So what that tells me is whatever native staking yield you're able to earn on Jito Sol is currently just not much greater than what you're going to have to pay to borrow Sol. So there's not an opportunity here to loop it. Now, you could loop that Jito Sol, by borrowing USDC, but then your max leverage APY is actually going to be lower than your native staking yield on that token. So the native staking yield on this token, I would bet, is probably around 7%. So if we bring it on back here to DeFi Llama, I want to type in Jito one more time. Let's bring it on over to the protocol. And I want to scroll down here. Let's take a look at that protocol website for Jito Sol. I'm going to say, okay, I agree, continue, thank you. And let's see, oh man, the staking APY is only 5.33%. So isn't the inflation rate for Sol like 7% still? So how does this make sense? If you're staking Sol on the Jito protocol, but you're earning less than the current inflation rate for the Solana coin, I don't see why you would do this. That doesn't really make sense to me. So, and now that we know that the native, like the intrinsic staking yield for Jito Sol is 5.33%, if we then know what the borrow APR is for SOL or USDC, that will allow us to figure out, okay, does it make sense to lever this thing up? I think the answer is no. I don't think that this makes sense to do at all. So yeah, you've always got to ask yourself, like, does holding the coin make sense? And if you're going to apply leverage, do you have a solid net interest margin? Like, what is the interest rate arb that you're trying to capture? I don't see an opportunity with Jito Sol, at least not on Camino. So let's bring it on back here to DeFi Llama, and let's hop on back to chains. And then I want to go ahead and scroll down to Solana. And then from Solana, I want to take a look at that. There's a money market on Jupiter. So Jupiter does have a money market, a lend borrow protocol that has been built into jup.ag. So on over here on Jupiter, I just want to go to the home page here. This is jup.ag. And what I'm looking for is the lend product. You see that lend product right there? So now I want to go ahead and zoom in a little ways. This is Jupiter Lend. This is a large money market on Solana. And so what I'm looking for now is I'm looking for Jito Sol. That's what I'm looking for here. So I wonder if there's even a market that contains Jito Sol. I don't think there is, or at least I don't see it here. So maybe there is a market here somewhere for Jito Sol, but I don't see it. So yeah, looks like you're going to be stuck using Camino if you want to lever up that Jito Sol exposure. But if you're going to have to pay, just about the same native staking yield to borrow, then there is no interest rate arb to be captured there. So yeah, I think I would have to pass on Jito Sol. Now, Mike, is there a coin, like a governance coin for the Jito Sol protocol? Isn't it JTO? Isn't that the governance coin for Jito Sol, the protocol? I think that's what this is. I think this is the governance token here, the JTO token. So there's the Jito Sol LST, and then I'm pretty sure that this JTO coin here is the governance token. So, just taking a look at this chart, one thing that I do see that's bullish is the fact that it's above its 200-day moving average. So that's a net positive for JTO. However, we always want to make sure that we price these things in Bitcoin terms. So I'm going to go ahead and price JTO in Bitcoin terms, and I want to zoom out just a little ways here. And, this is not what outperformance looks like. This is JTO massively underperforming Bitcoin. In fact, since its launch in December of 2023, it looks like it has done nothing but lose value against Bitcoin. So yeah, this would be something that you would want to be aware of. And
so JTO is strictly a governance token. In contrast, Jito Sol is Jito's liquid staking token, or LST.
Yeah. So, it is above its 200-day moving average in Bitcoin terms. And since April of this year, Jito the governance coin, has been outperforming Bitcoin. But since the end of June, basically for the last 3 weeks, it's corrected significantly. If we measure this from peak to trough, it's off 42% since the end of June. So over the last 3 weeks, this thing has lost 42% of its value in Bitcoin terms. So yeah, if I had to assign a grade to the Jitto protocol, what I see here is a lot of complexity. I see an LST that doesn't really seem to be all that useful within the Solana ecosystem. It looks like that native staking yield for Jitto Sol is actually lower than the inflation rate of the SOL token. So if you stake your Solana on Jitto Sol, on Jitto Finance, and you're not even able to earn the inflation rate, then, what are you doing? What's the point? Yeah. So, yeah, man, I think I'm going to have to pass on the Jitto protocol here.
I would say C minus.
Yeah, I think that makes sense. I would agree with you. I think a grade of C makes sense to me. So let's see here, Mike. With the last 18 minutes that we've got during today's call, I want to go ahead and bring it on back to markets. With Bitcoin today, this is a really nice candle on the daily. This is shaping up to be a pretty nice looking bull hammer candle on the daily here for BTC. And it's just so interesting to me. I was posting in the community source room at the node.pro over the weekend, asking what people thought about the resumption of strikes in the Middle East, the resumption of that conflict there. Because what we had seen in the past was that whenever there was an announcement of strikes in the Middle East, that Bitcoin reacted by moving to the downside.
Yeah.
But that's not what we're seeing today, and also not what we've seen over the last couple of sessions. So I'm just thinking to myself that, maybe we see a continuation of this upside out of BTC. I'm thinking that, you might have some resistance in this zone up here. So you got the 200-day moving average at roughly 73K, and then you've got trend line resistance, which comes in at $68,000. So I'm thinking that Bitcoin continues to rally up to 68K, and that is where we find resistance. And I think that that's also where we're going to find the top for this counter trend bear market rally out of BTC. So if that rally fails at the end of this month in July, what does that mean for altcoins? So I've seen some interesting takes from Crypto Rover on X about ETH. And so what he's been saying about ETH is, hey, you know what? If this rally fails up around that 200-day moving average, if ETH is able to continue to rally, but that rally fails, then you might actually see Ethereum put in, a capitulation low and maybe even a double bottom. So that's kind of what I'm thinking for Ethereum, is that you might see ETH come down and retest those lows from last bear market in 2022. And yeah, man, I mean, look, I don't have a crystal ball and time will tell, but I see this double top up here for ETH. And, I think that this rally for Bitcoin might be reaching its conclusion. So if Bitcoin rolls over, I think ETH will too. Let's go ahead and price ETH in Bitcoin terms. Now, this chart to me, Mike, actually looks bullish. If I go ahead and just zoom out here from a daily to a weekly, this is ETH in Bitcoin terms. And this pattern here, this right triangle pattern, notice how close Ethereum is to that level of trend line resistance. Very, very close. I think that during the next bull, you might actually see Ethereum break out in Bitcoin terms. If it does that, I think it could really run. So if it's able to break out during this next bull in Bitcoin terms, where could it run to? Well, maybe back up to those all-time highs in Bitcoin terms up here that was back in 2017. So yeah, man, I'm actually an ETH bull. I really am. Now, I think what we should do, Mike, is at some point over the next couple of weeks, I want to learn more about blobs on Ethereum. Those layer twos, those blobs. It looked like that could be some type of an ETH sink. So I would just want to verify that.
Real quick, Lucas. I mean, that's kind of what we've been talking about with these a lot of these projects that have been outperforming Bitcoin. Is there's a lack of correlation. So, in a sense, they've kind of depegged from Bitcoin, just because when Bitcoin dumps, some of these keep pumping, like Hype and other ones. So in a sense, you could say that was a depegging. I mean, would you agree with that, David?
So I think that I wouldn't necessarily describe it as a depeg.
I get what you mean. That's usually a stable coin thing, but
yeah, I think it's just that the positive correlation between Bitcoin and any altcoin, if that correlation becomes less positive, or maybe the correlation goes to zero, that's what I would be looking for. I would be looking for the correlation. And if there is no correlation between Bitcoin and that altcoin, or if that altcoin is maybe inversely correlated with BTC, that's something that's kind of interesting. Canton, for example, seems to be less positively correlated with Bitcoin. And that's something that I like. I want a source of less correlated returns. So, I think that Canton is an interesting opportunity. I think that Hype is an interesting opportunity. I think that Tron is an interesting opportunity here. Those three seem to be less positively correlated with BTC. So that's one of the things that I'm always looking for. Is this altcoin, whatever the altcoin is it outperforming Bitcoin? Does it meet our trifecta? Meaning, are there real users? And are those users growing? And do they drive real revenues on the protocol? And then those revenues that the protocol earns, do they accrue to token holders in some way? That's part of the value capture model there. So, I think that we see that with Hype. I think we see that with Tron, TRX. And, there's a handful of other protocols that we see that with too. Canton, as much as those revenues do accrue to CC token holders, this token is still highly inflationary. And that burn mint equilibrium has not reached 1.0 yet. So maybe it's a good idea if we take a look over here today at Canton Scan. And over on Canton Scan, I want to take a look at statistics. And let's just see, how's that BME doing today? So here's the daily burn mint ratio. And as of right now today, it's sitting at 0.7663. So unfortunately, that's not above a 1.0 yet. Now, the moment that it does get above a 1.0, I would assume that would mean something positive for the coin price, for the Canton coin price. But we're not there. Not yet, anyway.
Well,
so,
it's let's be honest, it's not a guarantee. It's shown with other projects to be a positive effect on the price of the token, but this is still a very speculative market, of these assets, this value accrual mechanism. I mean, it's the best, that we've found to try to sniff out, the best long-term investments in crypto. But for the most part, this market is purely speculative. We have no idea. A lot of these valuations on a lot of these projects, in my opinion, from a traditional valuation standpoint, are ridiculous. There's a lot of these that are in the top 50, the top 20, even the top 10 that don't generate any fees or revenue, or very little, and they have multi-billion-dollar market caps. It based on what? It's all pure speculation, and so there could be a huge correction on some of these. If the markets decide to start, on a method to evaluate, these projects, And there could be a massive correction to the downside, based off of whatever it is that they use to measure them. And if they do use a traditional method, that's why we came up with the trifecta. Was if you've watched Shark Tank, if you've listened to any VC, if you've listened to if you went to college for business and stuff like that, you understand how traditionally they've valued companies, and it has a lot to do with their customer base. It has to do with adoption with software and things like that. It has to do with the fees and revenue that the company generates. That's a massive part of, and that's why you have earning statements that come out for Nvidia, and why the price moves potentially so violently around those announcements, is because that is how these companies are valuated. Crypto companies, up until recently, it's been all retail. It's all been, basically all of these tokens have been treated like meme coins, but the people buying the token, they've been basing it off of bullish announcements about partnerships and things like that. That's what's driven these markets. So we are slowly moving into a utility market. A lot of the the narratives are going to be around RWAs and DeFi, and the onboarding of traditional finance, and these banks and institutions. That's where a lot of the attention is. The legislation, the Clarity Act, that's what it's geared around. The Genius Act, the Stablecoin Act, that's what it's geared around. That's where the focus is. So that's where my focus is.
Yeah, Mike, we've run deep dive research on many of these protocol coins in the top 100 so far over the last couple of months at the Node.pro. And, one key takeaway for me is that many of the protocol coins in the top 100 lack a legitimate value capture model. So that makes you wonder, how do you justify these massive market caps for something like Stellar XLM? Where's the value capture there? I don't think it exists. You take a look at Chainlink, the Link token. Where's the value capture to Link, the Link token? You take a look at...
That's wrong. Chainlink's doing huge things. Chainlink is the interoperability for, everything that's being built right now for the most part. So, don't get it twisted. What we're saying is that, can the price keep going up based off, basically people's perceived connection between the token and the company and its success? Absolutely. But if what we're saying ends up happening, and it's an if, but if it happens and people start to look at this as these aren't stocks, these aren't securities, there's, that's been pretty much determined, by this, administration. Obviously that can change. We saw that during the Biden admin. But, if the SEC and stuff like that decides that, these aren't securities, then the token is, there's no contractual obligation between the company and the token holder. And so they owe you nothing. There's no legal obligation. So it's basically, like I always use this analogy, it's the baseball jersey or the football jersey of your favorite team is what you're buying, if there isn't value capture.
And, Mike, we ran deep dive research on Chainlink. So for anyone who's interested in taking a look at this deep dive research, hop on over to the Node.pro, click on Intel Library. This is free. We give this away. So if you want to learn about the tokenomics for whatever coin or protocol token that you're interested in, just hop on into the Intel library and run through the deep dive research. The one thing for me that I recall from the Chainlink, the Link token deep dive research that we ran a couple of weeks ago, is that I'm pretty sure, although the Chainlink business is doing great things and it's used all over the place in DeFi, unfortunately, I think that they've abstracted away the value capture to the Link token itself. So what are you holding when you hold Link? You got to ask yourself that question. Are they going to upgrade the tokenomics at some point in time? Maybe. But for right now, I just don't see the reason to hold this thing. So, yeah, I mean, if you can pay to use Chainlink infrastructure in USDC, why would you need to hold the Link token? I
A
just,
volatile asset.
yeah, yeah. So, what are you thinking for deep dive research for tomorrow, Mike? Well, what are your thoughts?
Well, I mean, Lucas in the chat brought up Quant, and I mean, it's it's been in the past, it's been a higher market cap project. It's one of the the kind of in the ISO 20022 family. So yeah, I mean, we'll do Quant. I mean, you have something in mind that you want me to do the research on?
So, yeah, I mean, Quant sounds good. Let's do that one. There was another one in the same family, Cubic. Cubic. People are always
Okay.
talking about that one too. Those are both ISO coins. It could be interesting to run through some deep dive research on those too.
All right, we'll do Cubic and Quant.
Awesome. And seeing Bitcoin rally, man. This is on the weekly looking pretty good.
No, absolutely. It's so yeah, I'm going to keep an eye on these markets closely. I still got some dry powder sitting on the side, and if we get any significant pullbacks, there's definitely some projects that I'm eyeballing, and hopefully that Zenith token, we get some details on its tokenomics, and when that token generation event might occur, because yeah, there's definitely some that to me are higher on the horizon, as far as what they're building, kind of their use case, the fundamentals, what their the pain points that they're trying to address. Like with Zenith, they're trying to bring EVM dApps to Canton Network, and so that's potentially very bullish for both Canton, Zenith, and Ethereum. So it's just these are the kinds of things that I'm looking for. I'm trying to find the projects that are positioning themselves properly, with adoption. Because without solid adoption, it doesn't matter what it is that they're doing. So I'm looking for the solid adoption, the trifecta, the solid adoption. They don't necessarily, if they're early project, not necessarily hung up on the fees and revenue quite yet, depending on how old the project is, but definitely a factor. And then of course, I'm not getting involved in anything anymore unless it has solid value capture, or if I see it having massive potential as far as mind share. That's and it's going to be a very small portion of my portfolio. Those that I participate in that speculative move. So, what's your final thoughts, David?
I'm still waiting for the end of this Bitcoin bear market to start deploying capital, but I'm going to be highly concentrated in just a handful of plays. I'm thinking Bitcoin, Ethereum, Hype, Tron, Canton, and then maybe Solana, BNB, and Tau.
good,
Oh,
solid bag, of Aerodrome.
yeah.
Just going deep, just going hard and deep.
Oh man, you can do that, Mike. You
already
can
did.
go into the arrow. Yeah.
I already did.
So
All right.
yeah, man.
Well, we appreciate all of you that for tuning in every day and putting up with us. Filtering through the information that we put out. If you could on the way out, best way to support us, if you find us entertaining, if you find us informative, whatever, and support the channel, help us grow. Hit the like button down below. Subscribe, to make sure you don't miss any of our content. And again, thank you so much. Until next time, Veteran Crypto out.
Peace.